Rebecca Cavanis. I'm the Vice President of the Winterville Chamber of Commerce. The Chamber is really excited to be working with one of our members, Down South Accounting and Tax, to bring you this live income tax seminar, especially for businesses for the 2020 fiscal year. So I just want to remind you, if you are watching this live, you can comment and we can get it answered right away. So any questions you have, make sure you just ask. So I'll go ahead and get you started here. This is Debbie and Karen with Down South Accounting and Tax.
So I want to say we are following all COVID protocols here, but just so you can hear us, we're going to unmask for this. We want this to be very informal. We want it to be very helpful. So while people are coming on, we thought we'd talk a little bit about some just general things that have happened this year that affect all taxpayers. Everybody wants to know about the stimulus payments. If they're actually a new thing this year on your 2020 tax return that's called the Recovery Rebate Credit. So when you fill out your 2020 tax return, you're going to need to report how much you got for the first payment, which was back around April or so, and how much you got for the second payment, which was probably in January, although a few people are still just getting those trickling in right now. They're not taxable. But what happens is, because the IRS had to use prior year's data, they may not have paid you the right amount of money. The 2020 info is what determines how much money you truly are supposed to get for that payment. The stimulus was only an advance on that. So when you're doing your 2020 tax return, if it turns out that they gave you too much, guess what? For once, you get to keep it. That's great news. We don't hear that happening very often. But if they didn't give you enough, then what the remainder between what they should have given you and what you actually received, that's going to be part of your refund for your 2020 return. So it's very important. If you didn't keep the letter, nobody kept that letter back in April, look up all your information from your bank accounts. Be very accurate when you put in how much you received, especially if you didn't receive the full amount that you thought you should have, so that you can reconcile that on your 2020 return. Karen, anything you want to add to the rebate credit?
No, other than just going over what the amounts were. The first stimulus checks that went out last spring would have been $1,200 for each taxpayer, so that's $2,400 for a married couple, and then $500 for each child under 17. The second round of payments were $600 per person, so that's $600 for each taxpayer and $600 for each child under 17. Unfortunately, there was a group of dependents in there that were older than 17 that there was not any stimulus credit for.
Which means lots of college students and such, but again, that's the law, so all we can do is follow what the law said. Another thing that is brand new this year on the 2020 return is a charitable deduction. As you may know, a couple of years ago with the Tax Cuts and Jobs Act, we basically did away with itemizing. As a concept, it still exists, but pretty much nobody itemizes because they made the standard deductions so high. As a result, people who have been faithful in their charitable giving really weren't getting a tax break for doing that. Well, COVID came along and lots of people quit going to church. Their giving kind of dropped down. So Congress said, let's give them an incentive to keep giving. So what happens is for the 2020 return, it's not big, but every little bit helps, right? You can get a deduction of up to $300 for monetary donations to qualified charities, meaning that if it was cash, if it was a check, if you made a credit card donation, if you took a couch down to Goodwill, that was still a nice thing to do, but that doesn't count. It's got to be in money form. $300 per tax return, unless you're married filing separate, then it's $150 each. Good news is for next year, for the 2021 return, it will go up to $300 per taxpayer. So a married couple will be able to take up to $600 next year. And we are having some clients come in, and you know, we got great clients here, and they're just so honest. You know, they'll say, hey, I gave the money, but it's never counted before, so I didn't keep up with my records for last year. So start keeping up with it for this year. When you send that money to your church, you know, make sure you might as well get a little bit of a tax break on that. Anything else you want to add to that? All right, so the big one. This is the one that y'all were sending into the chamber ahead of time. Let's go on and give you the bad news up front. Home office deduction. That same piece of legislation that changed the way that the charitable donations and all kind of went away with the no itemizing a couple of years ago, that Tax Cuts and Jobs Act. It also did away with what was called unreimbursed job expenses. So if you're paid on a W-2 because you are an employee, you cannot take any job expenses. Obviously, nobody expected COVID to happen. Nobody expected people to be working from home, you know, not only running a home office, but using their own supplies, their computer ink, their paper. Yes, that gets expensive, but unfortunately, again, if you're being paid on a W-2, you are not able to deduct that. Now, what we hope is happening, especially as this continues so much longer than anyone had planned, if you are paying out of pocket to do your job, please talk to your boss. They can do what's called an accountable plan, which is where if you're having to go buy printer ink to do your job, if they will let you give them that receipt and reimburse you for it, that money is not taxable. And they can take it off on their business returns, so it's a win-win both ways. Because again, you're just not able to claim that job expense. I think there is an exception though for self-employed people.
Right, so self-employed people, if they have a qualified home office, can still take a deduction for having an office and home. What we have to keep in mind, for it to be a qualified home office, they have to have an area of their home that they use on a regular basis for business and exclusively for business use, for it to be a qualified home office. But if that is the case, they can deduct the cost of using a portion of their home to run their business if they're self-employed. Again, unfortunately, employees do not have this option anymore. So hopefully employers are looking out for them and reimbursing them for those expenses that they have to pay out of pocket.
When you say a section of their home, if I were self-employed, do I have to have a whole guest bedroom or something set aside for this? How does that work out?
It doesn't have to be an entire room, but it has to be a specific area that it can be a corner of a room that you've cleared off and designated as the home office, and we have to measure the square feet. That's part of the calculation, but so it doesn't have to be an entire room, but it can be a portion of a room. The IRS does look down on it being in a bedroom where you also have a bed, because they may view that as it's not being exclusively used for the business. So we want to make sure it's a distinct area that's been dedicated to the business.
Okay. Another thing that we're seeing a lot of, you know, tax season really just opened up last Friday is when the IRS started accepting returns. But we're already seeing people come in who in the past have always been just W-2 employees. But now, with everybody being at home, folks have free time, we're seeing an upsurge in people taking on side gigs. And that's, you know, whether you're selling jewelry or makeup, or you're creative and you're doing some sort of craft, or you're a great cook and you're selling cupcakes or whatever. You really need to make sure that you're very careful about reporting this. And, you know, we have a lot of people say, well, that's really just a hobby. I'm not going to report that. Again, the law says that we're supposed to report all income. And the whole thing about the hobby versus business, doesn't have anything to do with reporting your income. That really has to do with what kind of expenses you can take off. The IRS has, it looks like about 9 steps here that help you determine if it's a hobby or if it's a business. But again, you do want to be careful to make sure you're reporting that income. Now, on the other side of it is also keep up with those expenses so that you can minimize the bottom line on this. And there are some things with the new qualified business income deduction and all that it's really not as much of a what am I looking for? It's not a bad thing to report these side. I think people get scared of it. They think if I'm honest about this side business, I'm just going to pay all this tax, and you're really not. And we're hearing in some webinars that we're taking, even hearing from some IRS agents, that this is kind of becoming an area where they're starting to put a little more scrutiny because they know there are so many businesses out there that aren't reporting. So just keep that in mind. And if you've not been reporting in the past, you might want to start, keeping better records and doing that going forwards. There was some changes in retirement plans and people needing to access money.
So yes, the CARES Act made a number of changes when it came to withdrawing funds from your retirement plan. For 2020, if someone makes a COVID-related withdrawal from their retirement plan, they can get a couple of benefits from that. First, normally there's a 10% penalty for taking an early withdrawal from your retirement plan. If you're not 59 and a half years old yet, there's a penalty for that early withdrawal. Under the CARES Act, if it's a COVID-related withdrawal, that 10% penalty is waived this year. The second part of that is that you have 2 options. If you make that withdrawal, you can include all of that income on your 2020 tax return for tax purposes, or you can spread that out over 3 years. So claim a third of it this year, a third of it on your 2021 return, and a third on your 2022 return. So you have that option. You also have the option to recontribute the funds to a retirement account, and you have 3 years to do that as well. But if you wait until next year to redeposit the funds, then you will have to claim at least a third of it on your 2020 tax return. And then if in 2021 you recontribute it all, we would go back and amend 2020 to remove the income that you claimed. Is that right?
Yes,
okay.
Right.
To be a COVID-related distribution, though, that means that you or your spouse or dependent was diagnosed with COVID. That you experienced an adverse financial consequence because you were quarantined, because you were furloughed or laid off, or your work hours were reduced because of COVID, or you experienced adverse financial consequences because of you didn't have child care for your child because of COVID. So it's very specific. It's not that just because the entire country is experiencing a pandemic, not everyone qualifies for this COVID relief.
But if you do, we know that there are a lot of people out there that really had some financial difficulties as a result of this. And if you were someone who did feel like you had no choice but to raise your retirement fund just to meet your basic needs, just know there is some help here. And I know what she went through gets kind of complicated, but that's what tax pros are here for, is to walk you through this. So again, tonight we're just trying to give you kind of an overview of some things that are available. So again, it was bad enough. I know if you had to raid that account, but there is some help to keep it from being an even worse blow when you go to settle up on the taxes on that. And the other thing we wanted to mention here, the North Carolina legislature just last week reopened the application for what's called the North Carolina Extra Credit Grant. This was a $325 $335. See, parents get all this free money. Okay? We childless people don't get free money, so we don't keep up with this. But if you qualified for the federal child tax credit on your 2019 tax return, you should have gotten this check in December or so. It was simply to help defray the cost of having kids at home all the time. It was one way that the legislature chose to use North Carolina's share of the CARES Fund. There were a few glitches in that program because it came out so fast and the deadline happened so quickly. So if you, again, qualified for the federal child tax credit on your 2019 return and you didn't get that $335 check, you might want to check into that because that has reopened. And again, that's a tax-free grant. $335 might give snacks for teenagers for a week or so, maybe. So maybe it'd help you out a little bit there. So those are the things that kind of impact all of us, and we know that this is for the chamber. So just quickly, a couple of things that deal with businesses.
So on the business side of things, there's been a lot of legislation in 2020 to try to get some relief to businesses while the pandemic has been going on. One of the largest programs is going to be the Paycheck Protection Program, or the PPP loan program. That's an SBA program that folks could apply for loans to help cover payroll and some other very specific expenses that a business has. Those loans started back in the spring. In April, banks started funding those loans. The loan is forgivable. If you meet certain criteria, you have to have used at least 60% of the loan funds towards payroll over the covered period of the loan. If that is the case, you can apply with the SBA to have that loan forgiven. They just, within the last few weeks, released a new forgiveness application. If your loan was less than $150,000, it's just a matter of giving some details about you and the loan and marking a box to say that you spent the funds the way the funds were meant to be spent, without doing any more paperwork than that. The legislation that passed at the end of December added to this program. They are now doing second draw loans on the PPP program. So someone that received a loan through the first round of funding they're now eligible to apply for a second round of funding. With this round, they have to have been in business on February 15th, 2020, and they have to show that there's been a reduction in their revenue by at least 25% year over year, compared to the prior year. But also, if there are businesses that did not apply for a PPP the first time that they were funding these loans, they can now apply through this new round for the first time. And again, it's based on the amount of their loan is based on 2.5 times their average payroll cost. And then there's some very specific expenses you can use that for beyond payroll, but at least 60% has to cover payroll. And the good news on the forgiveness side is with the legislation that passed at the end of December, the loan is forgiven, and the expenses that are paid with the forgiven loan can still be deducted on the business's tax return. So again, it's one of those very rare occasions when you get to double dip in the tax code.
Except for, what did our great state of North Carolina do?
Except for some states didn't follow federal. So that's the federal rule. The federal rule is you still get to deduct the expenses. North Carolina decoupled from federal law on that, and any expenses that were paid with a forgiven PPP loan have to be added back into income on your North Carolina return.
Yeah.
So,
but at least you're getting the break on the federal side. So, there is that.
Another SBA program that we've worked through this year is the Economic Injury Disaster Loan Program, and this is actually a program that's been around for a long time. Anyone that was affected by a federal disaster could have applied for these in the past, but we saw it really get ramped up this year. In the original round, you could apply for the loan and you could receive a grant of up to $10,000, which was appeared to be based on $1,000 per employee that the business had. And then you could get a loan on top of that. The grant was not taxable, and again, the legislation at the end of December also made the expenses paid with the grant deductible.
What did North Carolina do?
So North Carolina has been silent on that. There's not been any guidance from North Carolina about these are EIDL grants, the EIDL grants. There's not been any guidance released specifically on the EIDL grant. So
if you're watching this, do not call your legislator, because we don't want them to know about this. Okay? Let's just keep this quiet and keep this benefit to us here in the state.
So that could change at any moment.
Yeah.
Next up, for businesses and businesses with employees, there was in the Families First Coronavirus Response Act, there was some relief to employers to pay sick leave and family leave to their employees. In fact, the law required any business with less than 500 employees to pay sick leave to their employees that became under quarantine or that suffered from, that had COVID. And the rules were they had to pay up to 2 weeks or 80 hours of sick leave. And up to 10 weeks of qualified family leave. And this would be if you had an employee who, for example, for family leave purposes, they didn't have child care because the child care centers were closed. If they could not telework from home to take care of their child, then they could get this family leave payment. So the law required employers to pay this, and then gave the employers a tax credit for paying it. So that's how they were reimbursed through payroll tax credits. So the good news on this is our self-employed business owners that do not have employees but may have had to were not able to operate their business because they had COVID. They can claim a sick leave credit on their tax return this year. Basically, if they had, the rule is if they had been an employee somewhere else and would have qualified for the sick leave, then they qualify for the sick leave as a self-employed person.
And also if they were caring for their children and that kept them from doing their normal business duties. Just to clarify, in case somebody's watching and saying, well, wait a minute, I went home and my boss didn't, pay me when I was quarantined. There was an exception for very small businesses for whom this would be detrimental financially, right?
With the Department of Labor.
Right.
And there was, that they could request a waiver, I think. So don't go in and accuse your bosses of not paying you sick leave without investigating all the facts and circumstances of that situation. But in general, employers were required to pay this sick leave. What else do we have? The payroll tax deferral, and we've not seen a lot of businesses take advantage of this. There were two. Employers could defer their portion of the Social Security tax from the end of March last year through the end of the year. And they could defer it as not being forgiven. They were going to have to repay half of it by the end of 2021, and the other half that they deferred by the end of 2022. The second Social Security deferral came about. There was an executive order signed in August that allowed employees to defer their Social Security tax from September through December. And then it required them to repay it. Initially, they had to repay it starting January 2021 through April, but the legislation at the end of December extended that. They now have all of 2021 to pay any Social Security tax they deferred.
And we have seen some local government employees that happened to them.
Yeah, so. The ones that we have seen have been federal employees, because the federal government automatically did that deferral, whether the employees asked for it or not. So, but we have not seen too many private companies and employers that took advantage of that. Again, it wasn't a tax credit, wasn't a waiver of any tax. It was just kicking the can down the road to next year or so.
And this is something that is also available, again, to the self-employed person, but for the reasons that she just said, unless you really need to defer this tax because you're having some cash flow problems, we suggest you go on and pay your full self-employment tax along with your Schedule C. But just know this is an option, because again, there are some people that this can really help them out of a bind. You can defer half of your Social Security portion of your self-employment taxes on your Schedule C.
Okay, and then the last big business-related legislation that was part of 2020 is the employee retention credit. And so this was a payroll tax credit that employers could take for keeping their employees on payroll. If the business either had to shut down under a government shutdown order, or if they had a significant decline in revenue for the quarter of the year that we're looking at, then if they continued to pay wages, they could take a credit for up to 50% of the wages that they paid to someone to keep payroll going. Initially, anyone under the original rules, anyone that received a PPP loan was not allowed to take an employee retention credit. But again, the legislation at the end of December changed that, and now they are allowed to do that. It just cannot be on the same wages, and there's a lot of calculations to look at to make sure that that's being handled correctly. So I would definitely suggest you talk to your accountant or your tax advisor, or whoever helps you with your payroll, to make sure that that's being handled properly.
So that's kind of an overview of things to keep in mind. Again, almost all of this is a result of the pandemic coming through. We have our cheat notes up here because it's just so much to keep up with, and truly we'll take a webinar on Monday morning, and by Thursday they're sending out updates to it. Congress, they're making laws and making them retroactive, so we're trying to stay on top of this. Certainly for any of our Winterville Chamber members, you've got a question, give us a call. You know how to get up with us. We're always happy to help answer some questions. And go on and talk about what you're writing me a note for.
So we've talked a lot about what happened in 2020 and as the rules stand right now. But there's a couple of pieces of legislation that you're hearing about in the news. It's not finalized. We don't have a crystal ball. We can't say for certain that any of this will go through the entire process and become law. But a couple of things that we're watching pretty closely is there's been proposed legislation in Congress to make the first $10,200 of unemployment compensation not taxable. So as it stands right now, unemployment compensation is taxable income. We have to put it on the tax return. But there's some legislation that's gained some serious ground in Congress to try to make a part of that not taxable. So we're keeping a close eye on that right now. The other thing is there's been a lot of talk about a third round of stimulus payments and how much those would be and who would qualify for those. Again, we're keeping an eye on that. Hopefully we can let you know as soon as we know something definite. I feel like there'll be another relief package passed. It's just, all these things, the wheels turn slow in DC sometimes. But be on the lookout for those coming up here.
Right.
Hopefully sooner rather than later.
Let's hope. With the IRS did announce today that they were not going to extend the tax season this year, that April 15 would be the deadline. Now, whether or not that carries through, because we laughed about it at lunchtime, I believe it was February of last year when they said the same thing, and then, who knows.
And then by April, the date had changed, so.
But again, we're trying to stay on top of things. Winterville Chamber has been so wonderful for us. I mean, I've lived in Winterville for 30 years, and it's just a great place to live. And so, we've got a lot of friends within the chamber, and guys, we're here to support you just like you've supported us. So if you got questions, give us a call. Karen will be happy to answer your business questions, and we're certainly here to help you out.
So I just want to say thank you to Debbie and Karen here. Obviously, they have a lot of really good information. Thank you all for tuning in, and a big reminder here that these ladies obviously know what they're talking about, and I think it would be worthwhile to give them a call. So thank you all, and have a good night.